You want me to kick off T-Mobile thing? Kind of my
Yes.
this. Okay, so let me. All right. Let me tell you what the plan was. How beautiful it was gonna be. I was going to take my savings. I was going to be like, hey, my 3 to 6 months of savings, right? I'm going to move this over to T-Mobile Money because I'm a T-Mobile customer. I'm going to get that 4%, APY, on the first 3,000 and 1% on anything else because no other bank is offering this right now because the rates are, just tanking. So I'm like, this is going to be great, right? And so I started shifting my money over, you can only shift over so much at a time, but I started shifting it over. Then yesterday, or was it 2 days ago, T-Mobile announces, before we do that, the requirement to get the 4% interest rate on the first $3,000 in the account, you have to make a monthly deposit of $200, which isn't that hard. You can make $200 deposit, take it right back out if you want, whatever, right? Not that hard. Actually, pretty convenient. At least relatively speaking. So 2 days ago, they changed the policy. They announced that they will be changing the policy, and I'll flash this up maybe in editing. But they announced that after March 31st, you will have to make 10 purchases with the debit card per month to get the 4% interest rate on the full $3,000 and 1% after. If you don't do that 10%, you just get 1% interest rate, which honestly is still better than most banks. But having said that, not happy. It's a lot more of a pain in the butt to create 10 charges on a card that you aren't intending to use, and just have money for your savings or just have your savings in an account accruing interest than it is to just deposit $200. And what's irritating about this is that they framed it in the framework of it being better for the customer in some way, and everyone's like, how is this better for the customer? This is harder for us to do, right? Especially if you weren't using T-Mobile money as your primary, account for spending, right? But you're using it for saving. So all that to say, I'm a bit torn as to what to do with the money because it's still a better rate, even if I don't do the 10 charges. But this is obviously some kind of ploy where it's like, okay, the $200 by doing the 10 payments, 10 charges, right, with the card, 10 transactions, I should say, with your card, you're going to be meeting that $200 per month goal, whatever it was, right, that they had strategically set up. They needed you to do that to retain certain amounts of money in the whatever the big coffers are for T-Mobile money or the bank. I can't remember the name of the bank that they actually do the banking under. I know everyone's about to come with that insider knowledge in a second, but whatever it is that they had set up with that $200 requirement is easily going to be met by you doing 10 transactions because you got to have money in the account. So they just made it such that you're going to keep more money in the account, I guess. Or you're going to have more money, or they're going to have more transactions. Either way, I'm a bit frustrated because I was looking forward to these gains, but I'm ready to hear the insight. I'm ready to hear the Professor Ashton thoughts and strategically, what is T-Mobile trying to do here?
Okay, so for me, again, this is just my opinions, right? I'm not providing any financial advice to anyone. But one of the things when you talked about T-Mobile money, I said, okay, cool, this is very interesting, right? Because what is T-Mobile's core competency, right? They provide services, communications to allow people to communicate with one another using a fundamental thing that we have today, which is our mobile phones and other devices. Okay, and then where does the money come in, right? And I get what they're trying to do, right? They're trying to create another perk or another service because, again, financials or financial systems or companies or fintech is huge now, right? Everybody's either using Square, Venmo, PayPal, one of those. And then in Asian countries, they have so many other apps there as well. So for us as consumers or just citizens of different places, like we're looking for opportunities, and T-Mobile wants to differentiate itself from its competitors, right? Or from its parent companies, like the AT&Ts, like the Verizons. Because here's the thing, the AT&Ts of the world have Warner Media, right? So that's how they differentiate. They gave their unlimited or some of the customers that they have on their different plans access to HBO Max, right? Or streaming service. And what does T-Mobile have, right? We see the commercials all the time. T-Mobile offering, you get this free streaming service with whether it's Netflix, Spotify, or something, whatever is at the time most popular. But again, that's those relationships with those other brands, and it's somewhat promotion. T-Mobile money kind of isn't like them promoting Cash App or some partnership like that. They're using Bank Mobile, which is a segment within a company called Customers Ban Corp, right? Which is an interesting thing because you're like, what is that, right? I've never heard of that thing before, especially because my question always was, first, how is T-Mobile doing this, right? Because a lot of these companies want to get our money. Bank works with you, having you invest the money or put the money in your account, and then they're investing it on the back end. That's how they're able to pay you the dividends or the interest, right? And the thing that you talked about too, Corey, is this. You said T-Mobile money is creating greater requirements to get to the interest rate. Because when I saw it, I was like, yo, 4%, shoot, that's higher than a lot of high yield savings accounts. Because I have a high yield savings account today, and it's 0.5%. Is that high, Andrew? I mean, compared to the regular banks, you're definitely getting something better with 0.5, but 1% or 4%, game changer. But again, like you said, 4% up to $3,000. And my thing here was this. There's no get rich scheme. Right? Again, as companies roll out new products, they realize and they look at the adoption. Anything that you do, you have to measure it to understand the effectiveness and how successful it can be, so that you can make tweaks. Because and this is associated but kind of a derivative. We use LastPass today, right? Devil and I use LastPass for our password management. They sent me an email and said, you can no longer access LastPass on multiple devices. You need to upgrade to the LastPass Premium to access multiple devices. Free only allows you to access one device type. So again, the assumption when we initially used LastPass was like, well, we get this free tool, we can use it on phone, laptop, blah. And now it's changed. But my thing is, Corey, most of us here on this call may have a credit union account, right? Mm-hmm. Which has checking accounts that offer a little bit higher interest rates than the regular banks of the world. But they require, and I think we all could attest to it, that you make 10 transactions to get to the whatever percentage. So T-Mobile isn't doing something brand new or something that's very uncomfortable or not seen before. But I completely understand that the assumptions and the expectations you had initially are changing as the product matures.
No, you're right. And so, because in most people, like I was going through Twitter and I just typed in hashtag T-Mobile money, and it's just anything that's recent is people complaining, right? And it's because no one, I won't say no one, that's not fair. A significant number of people, how about that? We're looking to use this as a savings option, not as a checking option, right? As in, my monthly transactions kind of thing. And so that means that either someone's rethinking their strategy, like you said, there are other options out there, other credit union options that will have a similar, transaction requirement, that would give you a higher interest rate than what you're seeing generally across the board at banks, right? For savings and checking. But I think a lot of people were just kind of blindsided. And I think to a lot of those folks' point on social media, and to your point, T-Mobile was differentiating themselves, right? They were in some way saying, look at us, we're doing it different. We're continuing to do this breaking the mold kind of thing that you've gotten used to over the past couple of years, and building all this great, good faith with people, and how we're looking out for you as customer slash people. And when they changed this, they also framed it as this is better for you as the customer. And everybody's like, no, it's not. In their email. I'm not sure if you got the email or not. I'm not sure if you signed up officially or not. But yeah, the email was like, we're making this change for you. And it's like, no, you ain't.
So I was gonna comment on something, and this is a slightly different perspective, and I think a lot of this comes from this feeling of like just not having enough time, right? So the term seeking alpha, right, is like really just indicating like getting these returns, right? And when you think about a 4% APY, right, that's a great return. Especially if you could just put the money in there. I mean, no bank is offering that. And I think, to Elroy's point, like you got to kind of wonder, what the heck is T-Mobile doing in that space? If that's not their core competency, what are they doing that many established brands and companies and financial people are not doing, right? Mm-hmm. To give me this kind of return. My mom has the saying, if it's too good to be true, it usually because it is, right? So I guess we shouldn't be surprised with this outcome, but my perspective on this is one of actually, figuring out ways to set up financial systems so that I don't actually have to spend too much time thinking or worrying about them, right? So in the example of, hey, getting that 4%, there's, whether we like to admit or not, there's probably a calculation for how much each of our hours and our time is worth, right? And there's an argument to be made that like, yo, is there a better use for your time? And is there a better place for that money to go, right? And that's kind of what I have been trying to really kind of wrap my head around and evaluate, right? As I'm making decisions about, where to bank, where to invest, like which exchange I should use versus the other, right? When I'm dealing with crypto. And in this case, this is one of those times where, the question that, I'll put to you is like, is there potentially a better place for that money to be from an opportunity cost standpoint, right? And then not only that, but in terms of managing another account, I know we got LastPass and a lot of different ways to kind of, manage multiple accounts these days. I mean, I think the gentlemen on this call are the ultimate spreadsheet trackers. But for me, where I've kind of settled when it comes to this kind of thing is just like my most valuable asset is my time and my ability to learn and grasp more knowledge. Anything that kind of takes me off of that path, I try to not necessarily stay away from, but it has to be like, look, this is going to be a significant amount of return. But because if I think I can get 4% by learning how to code something or tweaking this or learning about maybe more about marketing, right, for my business, that's a better use of my time, and that's a better use of my investment, not just capital, but also in terms of just like opportunity cost. So just a different perspective on that, just because I think we're going to see more of this. And I'm saying this just in the crypto space, I'm seeing like 8% APY. I'm seeing like people who are letting you loan your money out. They're going to give you 10% interest, right? And there's a part of me that's like, oh man, let me give them 50K. And then there's a part of me that's like, how are they doing this and why are they doing this, right?
So one of the things I agree with you, Damon. One of the things I would say is that, when you look at present value, future value, we need to really be considerate of what we're trying to do with our lives and the hard-earned money, right? Because I don't think any of us have got to a point where yet, and a lot of people haven't got to a point yet, where money's just coming in and they're sleeping and it's happening, right? A lot of us have to do a thing, whether it's sell a product, do a service, something else, and get that money. And we can think about it one way. When I look at the carriers, AT&T, Verizon, T-Mobile, right? Verizon and AT&T offers you additional perks per se. You get this unlimited plan, X, Y, and Z. You get free blah, blah, blah streaming services, right? AT&T says, you get free streaming service of this specific kind. T-Mobile now does similar things, but then now here they say, we offer you a different product where you can give us $200 per month and get 4% in interest. Nobody is doing that. So is that a greater value to you as a T-Mobile customer versus being an AT&T or a Verizon customer, right? Because that's a lot of that's a lot of return versus what you would typically get with other things. I think the thing that would be surprising, Corey, for all of us is that if we sat down and look at all the transactions that we do per month, yes, at this time we're going through, this global pandemic and those are items, but we're shopping online still. So those are transactions. When we look at that, we say, okay, can a small segment of my transactions be this card or T-Mobile? Right? And I reap the benefits of that. Of course, it'll be probably a 1% if, because not everybody's on T-Mobile. But for those that are and for those that aren't, 1% is still better than a lot of the high yield saving accounts that exist today. So I think it's a value add. I get your complaint about being early and it changing. And that's what usually happens. You're early adopter, you're going to experience some friction. What would be nice is if you were grandfathered into some type of experience. But again, how new is this product for that to even still apply? Right? But I think you're onto something, man, and I hope you don't become totally deterred from considering T-Mobile if it doesn't add value to you.
Yeah. Oh, yeah. So I guess I want to clarify. This isn't money I'm investing or nothing like that, right? This is my savings I'm keeping because things happen, emergencies, but it might as well earn a couple of $100 possibly per month. If that's the case, if it's just going to sit there, right, for a minute. And to your point, Demola, well, to Elroy's point, using Demola's insight, I think trying to set it up so I get the 10 transactions, I'm not sure that's worth the time, right? Because that means I have to start changing credit card stuff. All my stuff comes out of my checking. That means I need to start allocating certain money to the T-Mobile place for that checking stuff. But that's supposed to be my savings. So now I got to start mentally keeping track of how much savings
you got to start calculating.
Now everything it's at its limits, right? It's like, hey, anytime I'm past this line, this is gravy. Now I have to start monitoring this line in the T-Mobile account, my main USA checking account. It's like because now it's mixing, matching stuff, and I'm like, I can put an extra time and energy into something else. Not that it's a ton of time and energy, but it's also a lack of security. And so I'm kind of like, to my point, I'm disappointed about the 4% on the first 3,000, which is probably a difference of maybe $100 per month or something like that. Less you're gonna get or something like that. 1% versus 4%, or maybe it's like $75. I don't know. I'm just ballparking, right? Less you're gonna get, but 1% is still freaking awesome.
Absolutely.
Even when things were good, I was seeing. I think the best I saw was like 1.2 or something, maybe a 2 somewhere. I don't know if you found some online bank, but I get kind of suspicious of that stuff too. At some point, I'm like, what's going to happen? Because all those people who were doing like super high interest rates collapsed, the moment everything, changed in last year. So it's still really good. It's just, I think what made it terrible was the framing that it was for you. And maybe I'll do a screen clip and show you all the email that they sent and how they're responding to people on Twitter. It's like, it was like, really? Y'all can just be honest and just say, hey, we're just going to change it because we're just going to change it, right? Instead of the customer. And it's like, no, it's not at all.
It's their business. They're not a government entity that's supposed to be about the people. They're business trying to make money. And for them, that's why LastPass and others move away from freemium models that give you so many different features or capabilities to something that's smaller and tries to navigate you to the paid thing, right? T-Mobile is trying to create a service that has tremendous value, but at the same time, they see what you guys are doing and they realize that it was something that they didn't anticipate. Because I think that's the thing we learned, right? You create a product and you're like, oh, wow, people are actually using it this way. Well, let's see if we can catch them over on this side, right? And I get it. People feel deceived. People feel like you're changing the rules on them and expectations. Some people will leave, but some people may still go there. And even new people might still join. Because again, there's nothing as good as this that they're familiar with. A lot of people are familiar with the T-Mobile brand, even if they don't have T-Mobile as their mobile phone provider. So it's really, really going to be an interesting turn of event to see how this progresses throughout the year, especially because, again, it's so new. And as we come out of this, maybe add additional value, additional perks. Because AT&T offers a perk as a customer where you can get discounts on movie tickets and these different things. And T-Mobile may do something similar with this, similar to what Cash App is doing, right? So there may be some synergies there in terms of what they may end up doing as well. It'll be crazy if they start doing an investment capabilities or something like that. That'd be crazy. They buy some Bitcoin and then you start trading that. But hey, who knows, man? Who knows? Again, it's just my opinions.